What's going on, guys? Welcome back to another weekly portfolio update for my stocks and shares ISA. So as you guys can see, over the past week, the S&P 500 has done quite well, up 1.55%. However, being a Tesla investor, I've not been so lucky. This week's been a bit of a ups and downs week. So if we look at Tesla, we saw that we're currently down 3.93% over the week, and that there was a massive sell-off in Tesla all the way from 327 to just under $300 a share. Now this was because Elon, the big beautiful bill passed, or that's what Trump calls it. Elon doesn't think it's so beautiful. I don't really think it's that amazing. There are some good things in it, and just like everything in politics, the good things and the bad things. So. Elon didn't like it just because the massive, debt ceiling increase, and he spent 3 months of his life. He sacrificed his companies. He sacrificed, time with family to try and get government spending under control, and he managed to save $160 billion. But when the debt ceiling increased by 5 trillion, it kind of makes what he saved in the government obsolete. So Elon is obviously I don't know what Elon's thinking personally, but he's probably very frustrated. He put all of that time into Doge, and all of his savings is just going to be completely dwarfed by the increase in government spending. So he, rightly or not, as a fiduciary responsibility as Tesla CEO, I don't think he should be getting into politics, because he should be focusing on his companies. But at the end of the day, as Tesla investors, this is what we signed up for, investing in the stock. We signed up for, we it's not like we didn't know ahead of time that Elon does this thing, and him being so, in so many different avenues at once is why we think he's such a genius, being able to manage, SpaceX, X, Tesla, Boring Company, Neuralink. Him doing all of these different things is what makes him so good for Tesla. So, it's kind of a give and take, of Elon. You're not going to agree with everything he does, and you're not going to hate everything he does. He's overall, I think he's a net positive for Tesla still. He's just so good. The politics things, the third party, it's like, that's personally what I don't like. I don't mind him running all these different companies because I think it benefits Tesla. I don't really see much of a benefit to Tesla when he's trying to start a third party, but that's just me personally. And overall, I still think he's a net positive for the company. However, we did see a sort of rebound, Wednesday when they did report their delivery numbers. Now, obviously, they weren't great, but we obviously knew that coming in. Wall Street analysts all knew that, and a lot of people thought they were going to miss consensus, like the analyst estimates on Wall Street. So there was a lot of doom and gloom surrounding it. That's why the Tesla bulls generally were like, no, this isn't important. Look at robo-taxis. We just launched robo-taxis. Obviously, it is still a main driver for earnings, and that money, that they still need earnings to expand the company. So for the time being, it still is, a nice indicator of how good the earnings are going to be. But yeah, the analyst estimates were generally spot on this month for deliveries. I think analyst consensus was 386,000, and Tesla delivered 384,000. So yeah, normally analyst expectations are, either quite a lot lower than what they actually do, or quite a lot higher than what they actually do. So it leads to, generally a big sell-off in the stock after Tesla reports, because analysts come in too high. And yeah, people are generally disappointed. But this time they got it right, and surprisingly, Tesla, they were like, okay, yeah, if they're in line with analyst expectations, that's generally good. That's what you've seen for the stock. And yeah, the stock finished upwards overall for the week, still down 3.93%. That means my current portfolio is sitting at £96,000, nearly £97,000, sitting at a return of 17.58%, and still sitting at 420 shares. Average price 254.39. Now, if we go to my portfolio, you can see ISA allowance is at 8,500. Still got 11,500 put in. Cash was sitting at just £300. I could buy a share or two, just a share in a bit. But obviously, 4th of July, happy America Day for all of my American viewers. And yeah, so I didn't manage to buy because the stock market was closed on Friday, which was perfectly fair. Um, so yeah, if we look at my max, I'm currently sitting at a 23.9% rate of return, which obviously includes money putting in, which is even so, that's a nice rate of return. If I can keep that up going forward, obviously I'll be putting in less money in comparison to the amount of money in the account. See, if I put in 20,000 each year, and it's worth 20,000, that's for the first year. That's 100% rate of return in terms of money putting in. But then when I'm at 100,000, putting in an extra 20,000 is only a 20% rate of return. So, but then I also think it is possible to maintain this rate of return with, because Tesla has been generally quite flat over the past 5 years. We've seen ups and downs and massive ups and come back down. So, but generally it's been quite flat. If you compare it to, your Meta, your Google, your Amazon, it's generally underperformed all of those other stocks. But once we get robotaxi, actually scaling, that's when I think, we can easily see a doubling the stock. Obviously not financial advice, do your own research. Anyway guys, thank you so much for watching. Please make sure to like, subscribe if you enjoyed the video, and share with anyone else who might be interested. Anyway, that's it for me today, and I'll see you in the next one. Goodbye.